Berkshire Hathaway is now sitting on a record-breaking mountain of cash. So, the billion-dollar question for every investor is this: are they building a war chest for the opportunity of a lifetime or a defensive wall against massive hidden liabilities?
Well, Berkshire's latest filing just gave us the answer, and trust me, it is way more complex than you think. Let's get straight into the data.
We're going to break this down by looking at the three numbers that truly matter this quarter: that enormous cash pile, the big moves in their stock portfolio, and the legal risks that are starting to look very, very real.
Okay, first up, let's get a high-level view of the financials.
Now, at first glance, everything looks solid. You see healthy growth in assets and shareholder equity. But that's just the surface. The real story, the one you need to pay attention to, is buried in the earnings statement. Look at that. Net earnings are down by more than $21 billion compared to last year. But here's the crucial part. This isn't because their businesses are failing. No, this drop is almost entirely due to the wild swings in the stock market, and that really highlights the investment volatility you're exposed to here.
And that volatility brings us to the most jaw-dropping number in this entire report: the cash.
$381.7 billion. That's the combined total of their cash, cash equivalents, and short-term T-bills. It is an absolutely staggering amount of liquidity.
And just look at the growth. This cash fortress has ballooned by over $47 billion in just 9 months. Think about that. They are accumulating cash at a blistering pace.
So the critical question is, what are they doing with all that capital? Or maybe more importantly, what are they not doing with it?
This right here reveals a massive strategic shift. A year ago, they sold off $133 billion in stocks. This year, just $24 billion. They have slammed on the brakes. That tells you everything you need to know about how they view the current market. They see nothing cheap enough to buy and nothing expensive enough to sell.
And speaking of the portfolio, there was one huge development. They took a $5 billion pre-tax impairment loss on their Kraft Heinz position. And for an investor, that is a major red flag.
So what is an impairment loss? Put simply, it's an accounting admission of defeat. It means the company is officially stating on its books that the asset is worth less than they thought, and they don't expect it to bounce back anytime soon. It's a formal recognition of a long-term problem.
All right, let's shift gears from the investment side to the core businesses. With all this caution in the market, are the day-to-day operations feeling any pressure?
Well, away from all the headline-grabbing portfolio moves, the company's vast operating businesses, we're talking everything from insurance and railroads to energy, they remain the primary and, frankly, remarkably stable engines of this whole machine.
In fact, look at this. Total revenues are almost perfectly flat. For a company of this colossal size, that shows the incredible resilience of its core operations. The engines are just humming along smoothly. But, and this is a big but, hiding just beneath that operational stability, a very significant storm is brewing. And it's on the legal front, especially in their utilities business.
This quote is pulled directly from the footnotes of the report. $55 billion. That's the potential liability they're facing from wildfire litigation against Pacific Corp, one of their energy subsidiaries. The potential exposure here is absolutely immense.
And this number, this is what Pacific Corp has already set aside for probable losses from those wildfires. This is the amount they basically think they will have to pay, and it could be just the tip of the iceberg.
So these aren't just minor legal squabbles. You've got the huge Pacific Corp litigation. Then there's a nearly $2 billion antitrust verdict against their real estate arm, which could potentially triple. And on top of that, they admit in the filing that future wildfire losses could be significant. These are serious, multi-billion-dollar uncertainties that every single investor has to keep on their radar.
Okay, so let's pull all of this together. If you're an investor trying to make sense of this quarter, what is the absolute bottom line?
It really comes down to 3 critical points. 1, they have unparalleled liquidity, giving them a massive defensive shield and incredible offensive firepower. 2, they are extremely cautious, signaling a clear wait-and-see approach to this market. And 3, they are facing major and as of now unquantified legal headwinds that are getting bigger. And that leaves us with the ultimate question. Is this fortress of cash a defensive shield to weather these legal storms? Or is it dry powder, patiently waiting for the perfect moment to seize the investment opportunity of a decade? The answer to that is going to define Berkshire's next chapter.